That context plus then the model becomes the moat for you. I think pilot fatigue is massive. Over the last 12 months, what I've realized is AI wrappers with the right UX, with the right workflows, with the right proprietary context really have staying power. You can teach delegation, you really can't teach taste. VCs see the world in black and white. Hire a VP of sales. Why haven't you hired a VP of sales? But what that means in real life is
Gaurav, thanks for joining Venture Grounds.
Thanks for having me, Christian.
Let's definitely get right into it. Tell me about Mantis and how long you've been with the firm and what you're focused on.
Yeah, Mantis is an early stage enterprise software focused fund. We are on Fund 3, which is $105 million. Famously co-founded by the 𝐬𝐮𝐬𝐫𝐬𝐻 in 2019. We're on Fund 3 right now. It's a pretty small team split between LA and SF. It's about 6 investors, 4 GPs, 2 non-GPs, and Steve, who's a one-man army on the platform side. We've been in companies like Factory, ChainGuard, Rogo, Numeral HQ, StackBlitz, and a few others that are coming up. We don't lead, we only follow. So we are probably one of the most collaborative funds out there. We love to co-invest with all of our friends in the venture ecosystem. And we really use our social capital through the 𝐬𝐮𝐬𝐫𝐬𝐻 to add value both in terms of hiring and closing customers for our startups.
Awesome. And how long, remind me, have you been with the fund?
I've been with the fund about 1.5 years now.
Cool.
I joined from another fund called 𝐸𝐿𝐼x Interactive. Was at Google for close to a decade. 4 years in Sydney leading a sales team. Moved to SF in 2015. Was on the growth side for Google Maps. Was on a strategic growth team that did growth across all of our Google's mobile products. Went to Harvard Business School like all good VCs and been early stage investing since then.
Sweet. Awesome. Well, amazing journey and super excited to dig into the meat of which I'll get up to at Mantis. Kicking off, you mentioned Numeral was a company you invested in. Sam Ross, as a founder, has like a unusual path from jewelry to tax infrastructure. What signals kind of told you that that was the right person to back for this particular problem, given that the background maybe wasn't so obvious?
Yeah, Sam is I think, one of a kind founder for me. Pretty obsessed with both sales tax compliance as a space, but also Sam in particular as a founder. Sam was he was leading growth at Airbnb for a while. Very technical, was kind of consulting with YC. While he was running this large e-commerce jewelry business, he kept getting hit by tax notices or tax nexuses across multiple states in the US. And as an entrepreneur, what you want to be focused on is growing a business, right? And not really spending time in responding to tax notices that come in on a week, on a monthly basis, annual basis. Tax regimes change by state and by federal regulations. So what he decided to do as an outsider was, what can it do about it, right? As an insider, sometimes you kind of go along with the status quo and you almost like a frog being boiled alive. But for Sam, I think what really drew me to investing in Numeral, and Sam in particular, was running a jewelry business and running a tax compliance software firm. There's a couple of similarities. Think about the complexity of running a jewelry business, from supply chain, complexity of manufacturing, responding to taxation, product changes, the marketing that goes behind it, right? It takes a lot to really run an e-commerce business, especially in today's world with the competition that you have out there. Same with sales tax compliance. You're running very complex, using AI to scrape across tax notices and tax nexuses in a changing tax regime across states, across federal jurisdictions, now internationally, both on the e-commerce side and SaaS software side, which are two very kind of different paths out there. What I also loved was the go-to-market that they had in Numeral from the beginning, which is, let's give you a free tax nexus study or survey and use that to then sell you the software. So the go-to-market did really well. Each AE was extremely capital efficient with the amount of deals they closed every month. So for me, when I met Sam, heard the story, the founder product fit was really good. Very large growing market. I think some of the competitors were taken over by private equity firms, so innovation had slowed down. So it felt like a no-brainer to invest in a company like that.
Awesome. Yeah, so it sounds like he had lived the problem before, had experience dealing with sort of messy, complex systems, and had some initial proof points that he could do it. Is that generally how you think about investing in startups? Are those the kinds of things that you're looking for, or what else is really important when you're kind of...
So it depends entirely on the stage which we invest in. So we do everything from a pre-seed, which is a very inception level bet, up to a Series A and occasionally a Series B. So I think in each of the stages, those proof points and points differ. The common thread between all of that is what we want to look for is founder product fit or founder market fit. Like, why can't Christian start a sales tax compliance company? Why does it have to be Sam, right? Or we want to invest in large growing markets. We want to invest in a founder who has a nuanced knowledge of either go-to-market or product, or what's that earned wisdom you have from working in a specific domain for multiple years that somebody won't be able to replicate tomorrow.
Yep, makes a ton of sense. Does that sort of inform how much of what you're investing in is sort of like proactively sourced? You thinking about, maybe areas where someone needs a lot of domain expertise or time in the seat experiencing the pain to like build, versus it coming out kind of inbound to you? How are you sort of spending your time?
Yeah, I think some of our best deals, I think the deals that I've done at the front of the last year and a half have all been ones I've proactively sourced or proactively gone after a sector or thesis with a prepared mind. Because I think what that helps us do is, one, we can move quickly because we already have a prepared mind of competition in the sector, growth levers, what are the kind of proof points we need to see before we make an investment. What I will say is, for domain-specific nuance, that matters particularly in vertical AI. So whether it's construction tech, whether it's sales tax compliance for X sector. Whereas for more of a horizontal bent, which our founders are more technical, I think you kind of focus more on the technical aspect and proof points from their past experience of being excellent in whether it's engineering in as a domain or coding or whatever that looks like.
Yep. Leaning into sort of, vertical specific solutions in tax, construction, healthcare. We've talked a lot about sort of declining moats in general. How do you think about defensibility and durability with those types of businesses?
Yeah, I took this from my friend Joe Floyd at Emergence Capital. He has this thesis of value over model. And what that means is, if model is now commoditized, and models keep getting better over time, but a lot of that is now will get commoditized over time. Context or proprietary context becomes the moat, especially in a sector such as construction, in a sector such as taxation, right? Once you are embedded within ERP, within workflows, you kind of become the default workflow, and you're scraping 10, 12, 15 years worth of proprietary data from within structured and unstructured silos within a large company or even a small medium enterprise, right? That context plus then the model becomes the moat for you. That's something OpenAI can't scrape from the open web.
Yep.
So I think for me, when I look at proprietary context, nuanced go-to-market, really can you replace existing workflows and become the default workflow, get more data under management, under management of your system, that then turns into a system of record over time. So those are the kind of three things we look for in order.
Going to go deeper on that as well, I've seen a number of deals, especially, I used to spend time in Latin America investing early stage there, and there was a moment in time where I feel like every couple of days, workflow automation software for like freight forwarders or like cross-border trade was just, I was seeing it all the time.
Yes, so many, yeah.
It's a huge opportunity, and yet, it was extremely hard, seemingly, for folks to nail down. Everyone seemed to be building very similar products and thought they were doing it better than the rest, but it seemed to me that go-to-market was the biggest issue there, or even just like stickiness in usage, embeddedness in the workflows. How do you sort of build conviction in terms of when you're thinking about folks and their go-to-market strategies kind of early on in those crowded spaces?
Yeah, I think it starts even before the go-to-market strategy. So we invested in a company called 𝐾𝐨 AI, which does procurement workflows for general contractors in the data center, heavy industry, airport kind of space. And what I immediately struck out when even in the first conversation, was the qualitative difference in UX between existing spreadsheet-based workflows to their agentic AI-first workflows. And the first line of my investment memo read, this is not CGI, this is actually in the product today. That was the quality and caliber of difference that Ojonomy at 𝐾𝐨 had developed in their UX. So when you have general contractors at a Suffolk, Eaton, Yates, multiple folks who had POCs with them at the time, use this product, right? Almost like an aha moment or a magic moment, where you're used to clunky, very old, 20-year-old software that almost just replicates spreadsheets versus an agentic forward approach. So that kind of helps them become the default workflow, takes you from spending 60, 70, 80 hours a week as a team on spreadsheets to 2 hours a week. And with AI agents kind of almost having that action level outcome for you, versus you being the human in the loop and having the AI agentic system do things in 5 seconds and you spend 20 minutes checking it, right? That kind of almost short circuits the, and then over time, they can collect more and more data under management, build both upstream and downstream with the data they have, and then turn into system of record.
Makes sense. Becomes more durable over time.
More durable over time, but think of the enriched data and context they have on that data. They can tell you, hey, Siemens HVAC units typically slip their ship times by 4 to 6 weeks, which means you can then plan your work gangs as they're coming. You can prevent overtime. You can save money both downstream. And then over time, you can tell your sponsors, hey, did you know 70% of your HVAC shipments come from Siemens? Maybe you can negotiate a better price from them.
Yeah, that's super powerful. When you're thinking about investing in a founder, and it's clear that they are either needing support with something or asking for support, how much of that is a flag for you versus an opportunity for you to lean in and offer the support of what Mantis?
Yeah, we see it completely as an option to lean in. One, it shows me, depending on how a founder is asking for help and what is being asked for, really shows me the caliber of the founder as well. Let me tell you what it means. What I mean by that is, if somebody asks me for a specific high leverage help, it really shows that you dug into what you need help with and you're asking me why. So as an example, if somebody says, hey, I need an introduction to X CISO in your network, I'm trying to test Y hypothesis with one of our products. Can you please make that intro? Right? It shows me that, hey, you are kind of A/B testing something. Let me show you that I can actually open doors. Let me help you. And then because we have the CISOs in our advisory network, it kind of helps us also diligence the product on our side. Whereas, think of a more broader ask, like, I need help with GTM, or I need help hiring a co-founder. Like, that doesn't tell me anything and doesn't really help me help you a lot. What also helps founders see is just how helpful can Mantis be, how responsive can Mantis be, what is the depth and breadth of our network, and just how quick we are to come back and really roll up our sleeves and work with you.
Yeah. And on the topic of rolling up your sleeves, you're an ex-operator. How do you think that sort of impacts the way that you think about supporting founders and tangibly helps you help them?
Yeah. I think the biggest takeaway from my operating days, especially Google, is I have two. One is, I think, excellence in people. I joined Google in 2011. I was employee number 13,027 or something. And there was, and I think still is, a very high bar of hiring. So excellence in hiring, excellence in processes, and excellence in scaling companies and teams. So I grew from 13,000 to, how many of 1,000 there are today. I saw Google Maps grow from a couple of 100 million DAUs to 2 billion plus DAUs today. That really teaches you, how you scale and leverage teams and processes as you're growing. Second is what I call operational empathy. Think of a simple ask from a VC, right? Or VCs see the world in black and white. Hire a VP of sales. Why haven't you hired a VP of sales? But what that means in real life is you have to select a JD. You have to spend time away from building to actually now canvas your network to hire a VP of sales. You have to set compensation. You have to set hiring targets for a VP, for the team under the VP of sales. So there's a lot of friction involved in this process. So I think as an ex-operator with over a decade plus of experience, it really helps me internalize that empathy and be in there with the founders, helping them hire a VP of sales, versus asking for something as a board observer, a board member, and then being hands-off with that.
Yeah, you have the additional context. It helps a lot, I'm sure.
Helps quite a bit, yeah.
Yeah, it's amazing. Well, we're at our espresso round time, so these are sort of questions where the response is meant to be a bit more rapid.
Sure.
Let's get into it. What's one view you hold about the market that most investors would disagree with?
Yeah, I feel like SaaS is not dying, but I think services as software outcomes based pricing models are coming faster than we expect them to be. And I think companies and enterprises that are not really thinking through how that affects them in the next 18 to 24 months will get left behind. And the multiples will compress for companies like that.
That's awesome. What is one sort of thesis area or opinion that you've completely rethought last?
Yeah, I mean, I was bearish on the durability of AI wrappers, if you may. But I think over the last 12 months, what I've realized is AI wrappers, as I said, the models are commoditizing with the right UX, with the right workflows, with the right proprietary context, really have staying power. And we've seen that across multiple companies in our portfolio, multiple companies in the venture ecosystem today. So I feel like we're going to see the next 12 to 18 months as models become more powerful and compute becomes cheaper. We kind of see that the age of the wrapper coming up.
Yeah. Yeah, to your point, I think the game just changed.
The game
like
changed.
It's less about sort of maybe durability around product in and of itself, but go-to-market matters more and brand. What is the risk that you think most of VC is sleepwalking past right now?
Yeah, I mean, if you think of the amount of venture funding that is going into AI companies and then think within enterprises, how many pilots are ongoing, I think there is pilot fatigue. I have a feeling that there is some reckoning coming for a lot of startups without durability in 2026, where enterprises will see churn off the pilots that they've been going on with. So I think we need to go back, look into a portfolio, see where we can help them, diversify in that matter. So I think pilot fatigue is massive. I think it's an area where we're not spending enough attention.
Do you think, I mean, that sounds like it's a consequence of fragmented markets, essentially. Lots of folks building similar products, selling it at the same personas. Do you think you'll see consolidation in some of those places?
I think it's too early for consolidation, but I think over the next 2.5 years we will. Especially, if markets turn, if, there is some resizing in terms of how the markets are going, we'll definitely see some pain in that area.
Makes sense. Who is a company, founder, sector that you're super fascinated by at the moment, and why?
Yeah, I'm pretty fascinated by the built world today. So construction, as I was saying, it's the largest portion of GDP that is still digitizing, hasn't been fully digitized yet. So I'm looking at everything from pre-construction to customer support towards the end of it. Kaya was one of our only investments in that sector, but I feel like there's still a lot to be done in there. Everything from using AI and software to build designs, everything with permitting and workflows around there. I think there's a lot to be done still. So I spend a lot of my time actually mapping, working with general contractors, seeing where we can automate and still see new ideas coming up in the space.
I'm going to ask a follow-up to that, actually. Breaking the fourth wall, whatever. We've done a lot of podcasts today. Every single VC has said built world or physical AI is they're sort of like non-consensus bet, which makes it sound like it's maybe consensus now. How do you think about, when something like the built world, which maybe 6 months ago or certainly like 2 years ago was very hard to find capital for, is increasingly becoming kind of the consensus view? And do you think there's anything even more frontier beyond?
Yeah, I mean, I don't think it's consensus yet. I feel like we've still been investing in it for the last 2 to 3 years, 4 years, right? We've still had a lot of startups come up in that. We are seeing startups in construction now raise a B or a C, which means these have been funded at least 3 years ago. So I don't think it was consensus there. I don't think it's consensus today. A lot of firms won't touch the built world.
Yeah.
So I think there is still enough scope. It's not a winner-take-all market for the most part.
Yeah.
There's a lot of niches which run extremely deep because a lot of these are multi-trillion-dollar markets globally. Something more frontier than that, I don't know, data centers in space.
Cool. Yeah.
Yeah. I think there's a vigorous debate on X right now whether, I don't know if you saw the latest Gavin Baker podcast on Patrick O'Shaughnessy this week, but yeah.
Cool. What's a founder red flag that's actually like a green flag for you?
I love when founders really micromanage in the early days. Like, I genuinely love when founders spend and obsess over every single pixel, every single copy, every single hire. Because you can teach delegation towards in a later part of the company building process. You really can't teach taste, and you can't teach that texture that a founder has when they're building a company in the early days. Because the first 5, 10, 15, 20 hires will then determine your culture for the next 50 hires, next 100 hires. So I think that intense obsession with micromanagement is a pretty big green flag in my mind.
Yeah, cool. Like almost benevolent dictatorship.
Hey, it works.
Totally. Awesome. Well, it's been really lovely having you on the pod. Thank you so
Thanks
much.
for having me, Christian. Yeah.
And hope to see you again soon.
Likewise.